We are continuing the portion accounting entries. See, this entire chapter we are learning accounting entries. That is why the topic is same, but entries are different. So accounting entries is what you have to learn in this chapter, and how to write in journal. In the books, how will you record an entry? That's what we are discussing in this entire chapter. Okay, so again you will continue the specimen entries now. The next is you can give the heading as for recording closing stock. You write the heading as for recording closing stock. Specimen entries we are continuing. Okay, so what is closing stock? Stock, you know. Stock means it is a tangible asset held by the business either for the purpose of sale or for using it in the production process. That's the meaning of stock, and we learned there are two types of stock, opening stock and closing stock. Opening stock means stock in the beginning of the year. Beginning of the year usually it will be 1st of April. Then closing stock means stock at the end of the year. End of the year means it is 31st March. The financial year I am talking about. So closing stock, how to record, that's what we are discussing. So for closing stock, can we write closing stock debtor to cash? Is cash moving out from the business? No. Can we write cash debtor to stock? No, because stock is there with the business. We are not getting cash. We are not paying cash also unless it is sold. So just for recording closing stock, the entry what you have to write is closing stock account debtor to closing stock account debtor to trading account. Now you have heard this term trading account. In the first chapter when we discussed the financial statements, 3 financial statements we discussed, the trial balance, then second one trading and profit and loss account, the third one is balance sheet. So this trading and profit and loss account, that is the financial statement or final account prepared by the firms at the end of the year to know the profit or loss. So to that account we are transferring closing stock. Don't write it as to cash and all. This must be transferred to trading account. So the journal entry is closing stock account debtor to trading account. Okay. Then the next one, actually the name is trading and profit and loss account. But when we do problems, trading and profit and loss account will be done separately. These are two accounts. Though the name is like trading and profit and loss account, we will be doing it as two separate accounts. So here you must write only trading account. Then the next subhead, outstanding expenses. Just write outstanding expenses. Did I say paid outstanding expense? No. Just read the heading. It is simply for recording outstanding expenses. If I say like paid outstanding expense, you can write to cash. Here, can we write to cash? No, because we haven't paid anything. It is simply written outstanding expenses. Understood? It's simply written outstanding expenses. We haven't paid anything. And what is the meaning of outstanding expenses? Expenses which are payable by the firm. Still it is payable. So what is the nature of payable items? Payable items are liabilities. And liabilities account should be credited. Which rule is this? Liabilities account should be credited. Modern classification, you remember, liabilities, capital, revenue or incomes should be credited always. These are having credit balances. See, all those rules we have to apply actually. Nobody will ask you, I mean for the final exam, no question will be there like what balance liabilities are having. No, you can't expect such a question. But we are doing problems based on those rules. So you must be thorough with those rules actually. So liabilities are having a credit balance. So outstanding expenses are liabilities and outstanding expenses must be credited because it is liability. And what can we debit? That is the next question. What can we debit? Can we debit cash account debtor? When there is an outstanding expense, are you receiving cash? No. At the same time, are you paying cash? No, so you can't write to cash also. So what you can debit is just write expense account. You write concerned expense account debtor. The meaning is if you are getting an item like salary outstanding, the journal entry what you have to write is concerned expense means salary. So salary account debtor to outstanding salary account. That is the entry for recording outstanding expense. But if they give you the question like paid outstanding expense, this is not the entry. This is for recording the outstanding expense. Paid outstanding expense means cash is moving out. So what should we write? It is outstanding expense account debtor to cash. If they say like paid or else, this is the entry. Okay. The next one, prepaid or unexpired insurance. Sorry, expense. Insurance can be the example. You write the specimen entry as prepaid or unexpired expenses. Okay. Prepaid, that means the meaning we have discussed already. It is paid in advance. Expenses which we pay in advance. It is also known as, both terms you must know, it is also known as unexpired expenses. Because before the expiry, before the maturity date, before the date of payment, you are paying it. That's why it is called unexpired expense. What is the nature of prepaid expense? Prepaid expenses are always assets. Understood? It is always an asset, and assets account will be always having a debit balance. So here you must debit, you have to see to the nature and decide whether it should be debited or credited. So the entry is prepaid expenses account debtor to, can we write cash account? Prepaid means you paid in advance. Today when you record, can you write to cash? No. If you are paying it right now, you can write to cash. Here you have paid in advance means last month you would have paid it. So don't write to cash now. You must write it as to concerned expense, just like your above question about transaction. If it is prepaid rent, you must write prepaid rent account debtor to rent account. Concerned expense is the rent account. Why we debited prepaid expense? Because it is an asset. Asset should be always debited. The next one, accrued income or income earned but not received. Write the heading. Accrued income, that also we discussed. These four adjustments we have discussed before. Not the entry but the meaning. Accrued income or income earned but not received. Understood? What is the nature of accrued income? We haven't received the amount. We have to receive it later. It is receivable for the firm. So accrued incomes are receivable items. Receivable items means the asset. So asset accounts should be always debited. So which is the asset account here? The accrued income you have to debit. So write the journal entry as accrued income account debtor to, what should be credit? It is the concerned, not expense, it is the income here. So concerned income. If it is like accrued commission, you can write accrued commission account debtor to commission account. Understood? So accrued incomes means receivable. It is an asset for the firm, so we have to debit it. Clear? We haven't received anything, so we can't debit cash. Then we are not paying anything, you can't credit cash. What you have to credit is that concerned income. To commission account you can write. Then the next one, similar one, that is income received in advance or unearned income. You write income received in advance or unearned income. The other terms also you must know. This is called unearned income, whereas accrued income called income earned but not received. Okay. Income received in advance. Income received in advance means before the date you got the amount. Suppose you agreed that customer need to make the payment only next month. But you got the amount in advance. Customer paid us the amount today. Understood? So in advance you are getting something. In advance when you receive something, it is a liability for you. Because you are supposed to receive it only in the next month, when you receive it this month itself, what happens? It is a liability for you. How it is becoming a liability? You have a liability to give this amount back to the customer if the customer asks for the amount. Because receiving in advance means it is a liability for the firm. You can't receive. You can't receive means it's not like you can't receive, but when you receive in advance, when you receive the incomes in advance, you always have a liability to give the amount back. Okay, so income received in advance, the nature is liability. Liabilities account should be always credited. So what will you write? To income received in advance account. It's a liability, so that should be credited. Income received in advance account, sorry, that should be credited. So what should be debit? The concerned income we have to debit. Concerned income account debtor to income received in advance account. Understood? The next one, depreciation. The next one is depreciation. What is depreciation? The word meaning you know. Depreciation means, that's the next heading you have to write. Depreciation means reduction in the value of fixed assets due to wear and tear, due to obsolescence, meaning outdated. It can be due to passage of time also. So which are the two accounts we have to write here for depreciation? It is decrease in value of fixed assets. Of course, fixed assets we have to write. Then what are we recording? The depreciation. So two accounts which we have are depreciation and fixed assets. Now it is decrease in value of fixed assets. Fixed assets or assets going down means assets account should be credited. The modern classification rule. So what will you write? The assets account going down. So assets or fixed assets we will credit. Then which is the other account? The depreciation account. Or else you think from depreciation point. You start with depreciation. What's the nature of depreciation? It's a kind of expense for the firm. Isn't it? It's a kind of expense or it's a kind of loss for the firm. Expenses or losses should be debited. Understood? Then the other account which is going down is fixed assets. So depreciation account debtor to fixed assets account. The next one, two more specimen entries we have to learn, that is interest on capital. You give the heading interest on capital. Always think from firm's point of view. Interest on capital means we are allowing interest to the capital, to the owner who has invested his capital. Isn't it? We are paying or we are providing interest to the owner because he has invested his amount. So from firm's point of view, this is an expense. Interest on capital is an expense. Always you have to think of the nature first. So it's an expense. Expenses should be always debited. So what will you write? You have to write it as interest on capital account debtor. It's an expense, so that should be debited. Interest on capital account debtor to capital, that's what you have to write. We haven't paid anything right now. Did I say like paid interest on capital? No. This is the entry for just recording interest on capital. So you can write to cash because we haven't paid anything right now. When you pay, you can write to cash. So here, why we credited capital? It is to the capital account you are adding. So capital account will increase. Capital account normally having a credit balance. Now that will increase means again you have to credit it. It is to the capital you are providing. So interest on capital debtor to, don't write to cash. It is to capital you have to write. Then the next one, the next specimen entry, it is interest on drawings. Interest on drawings. Okay, interest on drawings. Now think from firm's point of view. Is it an expense, income, asset, liability, capital? What it is? Interest on drawings. Drawings means amount or goods withdrawn by the owner for his personal use. So on that amount we are charging. What's the meaning of charging? We are taking amount from the owner. I mean we are charging interest on that amount withdrawn. So from firm's point of view, this interest is something which we are getting. It's an income. Understood? I didn't say like received interest on drawings. It is just for recording interest on drawings. Just like this. We haven't received any amount right now, but we'll receive it later because it's an income for the firm. So interest on drawings, it's an income for the firm. So incomes must be always credited. Incomes must be always credited. So to interest on drawings we have to write being an income. Incomes must be credited. From where you are taking the interest actually? On which amount will you charge the interest? See, the owner will take amount from the capital for his personal use. So on that amount you are charging the interest on drawings. So on which item you are charging all these? It is again on the capital you are charging the interest on drawings. We have discussed this in accounting equation. This interest on drawings and interest on capital. You remember with capital you added, then you deducted the same figure. Interest on drawings and interest on capital, the same effect you did. Because these are affecting the capital balance again. Both will affect the capital balance. So interest on drawings, it's an income that should be credited. Why did we debit capital? Because it is on the capital you are charging interest. It's from the capital you are taking the interest. Understood? So this is how you have to write the specimen entry. Then we'll work out illustration number 14. Okay, illustration 14. I'll just explain. We'll discuss it. You must do it in your book. You must write it in your book. I'll write the new transactions. Okay, the first one, interest due but not received. Interest due but not received. What's the meaning? Interest due and not received means it is receivable. Such items are called accrued items. So what's the journal entry for that? Just draw the format and do. Give the heading journal. Give the column headings. Then start recording. The first one is accrued. It is interest, no? Yes. So accrued interest account debtor to interest account. Accrued interest account debtor to the concerned income. That is the specimen entry you learned. Accrued income debtor to concerned income. So this is the entry. The amount is 4,000. It is 4,000. Write the narration. You simply write accrued interest. That's enough. The next one, salary due to staff. Did they say that salary paid? No. It is due to staff means it is payable. So it is outstanding salary. What is the journal entry? Concerned expense, that is salary account debtor to outstanding salary means liability that should be credited. So to outstanding salary. You can write the narration, outstanding salary. The amount is 25,000. The next one. Out of the rent paid this year, 2,000 relates to the next year. So you have paid in advance. That's called prepaid. Paid in advance, not received in advance. So it is prepaid. It's an asset and prepaid items should be debited. So prepaid What's the item? Is it rent? Yes. So prepaid rent account debtor to rent account 2000. So study the specimen entries first, then do these problems. The next one. Provide 10% depreciation on furniture. What's the entry? All these entries we discussed just now. It is depreciation account debtor to furniture. And it is not given the amount directly. It is given 10% on 5,000. What is 10% on 5,000? Just cut one zero when you have to take 10%. So it is 500. Depreciation on furniture you can write, or depreciation simply. Then the next one. Goods used in making furniture. Okay, you are using goods to make a furniture. So the two items or two accounts are furniture account. The other is goods account. Instead of that you will write purchases. What is happening to purchases? We are using the goods. So the purchases will be reducing, or purchases are moving out. Moving out means that will be converted into a furniture. That will be converted into a furniture. So purchases are like it is moving out from the business, or purchases getting reduced. So purchases we have to credit. So two purchases. What are we making using this? Furniture. So it is furniture account to be debited. So furniture account debtor to purchases. Amount is 1,500. You write goods used for making furniture, the narration. The last one, sixth or seventh. Sorry, not last one. It is sixth transaction. Received commission of 10,000 by check, half of which is in advance. Okay. You received commission of 10,000. What is the journal entry when you receive commission? Is it by check? Yes. So bank you must write. So bank account debtor to commission. Bank account debtor to commission account. Okay. How much did we receive? We received 10,000. So bank we have for rupees 10,000. But it's written half of which was received in advance. When you receive something in advance, which account you have to open now? You have to open an account called income received in advance or commission received in advance. Understood? So commission received in advance should be debited or credited. What's your answer? It should be credited, because anything received in advance is a liability. Liabilities should be credited. So you must credit one more account in this transaction. This is a compound journal entry. To commission received in advance account. To commission received in advance account. Understood? How much did you receive in advance? The half, 5,000. So the balance 5,000 you will write to commission. I hope you understood this. Bank debtor to commission we wrote, because when you receive commission, that's the entry. Now how much did you receive? Altogether 10,000 you received by check, but it's written half was received in advance. So for that you have to open a new account like commission received in advance account. You write the narration as the transaction itself. Received commission, half of which was in advance. The next one, allow interest on capital. What's the journal entry? It's not written like paid interest. Paid means 2 cash will be there. Here we are just allowing, or we are just recording. So interest on capital is an expense, should be debited. So interest on capital, debtor to capital. That's the entry that you must write The next one, charge interest on drawings. What's the entry? Interest on drawings. Just think of the nature. It's an income. Income should be credited. What should be debit? The capital. So capital account debit to interest on drawings. Understood? So study the specimen entries first, then you work out this illustration 40.